Good morning, traders. It is April 27th, Monday morning, and we are almost 3 hours into trading. Let's take a look at the market, see what we've got going. We have some resistance here. One, two. This would be the third time that we're testing this resistance level. You can see that on the daily chart. I'm going to put up the weekly chart. You'll see that the 100-day moving average, 100-week moving average is coming into play at that 288 level. That was my first target when we got out of our long position on SPY. I think this level is going to hold. It's certainly going to provide some resistance. We also have the major resistance at the 300 level with the 100-day and 200-day moving averages both coming into play. I don't think we're going to get that high. Right at this level, we are halfway between the high from February and the low for March. And I believe that asset managers are playing it safe right here. They have no clarity. They're waiting to see what happens. Corporate guidance has been very poor after companies have announced earnings. They have no idea of what to expect. When is this shutdown going to end? How quickly are consumers going to get back to their old behavior? Is the stimulus money going to be enough? All of these variables are in question. We've got a lot of economic reports coming out this week. We have ISM manufacturing. We've got the FOMC statement coming out Wednesday. We've got official PMIs coming out from countries. We have the first quarter GDP estimate. But all of these numbers are backwards looking. A lot of the agencies have been shut down. The data has been very hard to come by. So I think you've got to question everything that you see right now. We've never been through anything like this before. Asset managers know that. I am seeing some credit issues on the horizon. So are asset managers. And those could be problematic in the long run. I'm not going to get into a lot of detail there, but I will tell you that that spans from sovereigns to the consumer and everything in between. So you've got consumer credit write downs by banks, and you've got uh, euro interest rates starting to creep higher from negative territory. And it's not because the economy is improving. It must be because there's some risk getting priced into those bonds. You've got a company like Diamond Offshore Drilling filing for bankruptcy. So there are a lot of problems out there right now from a credit standpoint. And I think the credit wheels are starting to wobble a little bit. Every week that this shutdown lasts and gets prolonged, the greater our chances for a credit crisis. But right now, the market's pricing in fantastic news. All I read about in this morning's news was how there are states like Alaska and Tennessee and Texas and Georgia that are looking to reopen their economies, and how New York was planning its phase one uh, reopening. That's all expected. That's priced into the market. Everyone's expecting that the virus is going to start to decline. The spread of the virus is going to start to decline, and eventually we're going to get the economy back on its feet. But I didn't see anything about Wisconsin extending their shutdown, Illinois extending their shutdown, Michigan extending their shutdown. Don't read anything about that. So it seems like there's a pretty rosy picture being painted right now, and I'm not completely buying into this rally. So today, the price action is very lethargic. We're seeing a nice grind higher. We had that opening gap higher right here held, and then we had some nice tails under body, but it's been such a gradual climb higher. You can see this nice upward sloping channel that's forming, but we do have some pretty stiff resistance here right around that 287 level. I am expecting that we're going to keep trying to break through it, and we're going to get a nice little dip this afternoon, and that dip will give us a nice entry point for long positions, and then we can look for a nice charge towards that high, possibly even break through it. We've got a lot of optimism that's building because we've got big mega cap tech earnings coming. Google after the close tomorrow, Tuesday. Then we've got Facebook and Microsoft announcing after the close Wednesday. Then we've got Amazon and Apple after announcing after the close on Thursday. We've also got Tesla on Wednesday. We've got Twitter on Thursday. So we've got big tech companies announcing earnings. Unfortunately, I don't believe that these companies are representative of what's going on in the entire S&P 500. Some of these mega cap tech stocks have actually prospered during the coronavirus because of their business models. The rest have been at least able to hold their own. So I think that you're going to see a lot of optimism through the course of the next week. And also, mind you, that Q1 was ending and we had only seen a few weeks of this coronavirus shutdown in those numbers. So the worst is yet to come. Once we get all that euphoria and all that optimism built in, I think that we're going to see some selling pressure, and that should start poking its head up probably in the next, I would say, week to 2 weeks. We should start to see some pretty heavy resistance and a nice little pullback. In the back half of earnings seasons, you've got lots of retail companies announcing, you've got energy companies announcing, you've got industrials. So I feel that the good news is going to get priced in the next week or two, and then we get into the tough sledding. Then we have to see how this reopening is actually going to unfold and how anxious consumers are to resume their purchases. I think that most people are going to go back on the job and they're going to look at the health of the company that they work for, and they're going to try and determine whether or not the revenues and the orders coming in are going to be great enough to ensure their job. And until they know that they're going to have a job, I think they're going to keep their consumption to a minimum. And we're hearing about how restaurants are going to reopen in all of these states and casinos. I know the restaurant business, and they are built to service peak periods. That's when they make their money. It's not going to work to have half the seats or a third of the seats in a restaurant occupied. The profit margins are razor thin. These companies are not going to be able to resume operations using that kind of business model. So, in any case, look for some tough sledding ahead. We've still got some upward impetus in the market. I'm going to keep this video relatively short because earnings season is upon us. We've got 112 companies in the S&P 500 reporting earnings this week, and then we've got the climax of earnings season next week. So I want to spend today and tomorrow focusing on how we trade pre-earnings announcements and post-earnings announcements. So I'm going to do a special video to show you the option stalker searches that we use for that. Very, very effective, and we're going to be leaning on earnings over the course of the next 2 weeks. We don't have any clarity or any certainty in any other type of trading that we're doing because we don't know where the market's going to go, but these earnings reactions are very, very telling, and we can take advantage of them. So let's go back and take a look at Friday. I'll review the stocks that I highlighted, and I gave you two longs and two shorts. Let's start on the short side. Boeing is one of the shorts that I showed you. You can see Boeing's downward sloping trend line is still intact. You can see how the stock has actually moved lower, and it was about 2 hours into trading that I did that video, 2.5 hours, right around the same time frame. So you can see the stock is lower. It's worked out to be a nice swing trade or a nice day trade. LVS was the other short that I had mentioned. You can see that one is not working out. Here's about the 2.5 hour mark. You can see how the stock shot higher. Now we're going to go into the daily chart, and if you're in this position, you should be stopping out of it. We had this downward sloping trend line, and that was the point that we were leaning on, which also was the open from Friday. Well, that has been breached right now. So you needed to stop out of that trade if by chance you're still in it. I think we're going to get that little afternoon dip. And if you go into a 5-minute chart on LVS, you can see 1, 2 tests of that high and a lower high and a downward sloping trend line right now. So I would say I wouldn't be aggressive in buying this back just yet, but I would set that trend line. And if that downward sloping trend line is breached, then you have to buy it back. But try and buy it in here on these dips. So the laggards, as they say on the street, the dogs are barking. The weakest stocks are catching a bid in here, and I think they're way ahead of the game. So there should be some weakness and an opportunity to reel this back in. But LVS, call a spade a spade. It's a loser. Not a good trade. Not a good short. I've had a very difficult time making money on the short side, by the way. That's why most of my day trades have been on the long side, which I did give you a couple of longs to look at. So we're about 2.5 hours into trading last Friday when I showed you KLAC. Very nice winner. on a day trading basis and on a swing trading basis. Had that nice gap this morning. It went back and checked that prior day's close, found support there, rallying off of it. KLAC has been very nice. CRWD was the other long that I showed you. And CRWD has actually been moving higher as well. Long in here, stock is higher. Take a look at that daily chart. Got a nice horizontal breakout right there. Good follow through. I don't know that I showed you the KLAC daily chart, so let's go in and look at that. And then we'll find a couple of longs that I like for today for a swing and day trading basis. There's your KLAC. Nice little breakout right in there. Above that 100-day moving average. It looks good. One of the searches that I really enjoy using, Pop Bull, is fantastic for swing trades, but I'm going to focus a little bit on heavy buying just to show you. SPG, Simon Property Group, they're a real estate investment trust that specializes in malls. Shopping malls are empty. What the heck is this stock rallying for? Are there stores going to be paying SPG rents and leases? If they get some of the PPP loan from the government, yes, I guess so. But otherwise, these stores are going to be in serious, serious trouble if consumers don't get back and start consuming right away. As I continue to scroll down, FLIR is one of the stocks I really like. You can see this gap higher right here. Stock comes and it checks that gap, and now it's back off to the races. I made some decent money on this today. That was the only stock I made a decent amount of money on today. The rest have been tiny little winners. I haven't had any losers, but the market's not going anywhere. I think everyone's waiting to see how the data comes out this week, and most importantly, how the earnings come out and what those earnings reactions are. So look for a very quiet rest of the day today with a possible late day rally above resistance. So that's one that I like. I also had noticed Lululemon, and I like Lululemon because it's through the 100-day moving average. Now it is an apparel company, so and they do have an online presence, so they could be doing some really nice online sales. But in terms of stores buying their product, I think there you're going to see some lag. I'm not going to be in the trade that long. Here's what I'm looking at. I am looking at that daily chart and I'm looking at that rally above the 100-day moving average. I like that. As long as it can hold that 100-day moving average today, I think you can sell down here at the 210 level. And so what I would do is I'd be looking for a bullish put spread, selling the 210 puts, ideally the May 1st expiration, which is Friday. Sell the 210 puts, buy the 207.50 puts, do that for a 50-cent credit. That is a bullish put spread. I don't know that I'd want to go out to the May 8th expiration because then I'm starting to get a little bit closer to that window where I think we could see a market pullback. So we do need to have a market dip for you to be able to get that kind of bullish put spread price off today. If you don't get the market dip, there are times when you just got to be passive and take a pass on the trade. Don't force anything in here. Make sure that you're getting in your trades at a really good price. The market's not going anywhere. In another 3 days or so, I'm probably going to have a little bit of egg on my face because everybody will go, look at the market rally. Look at how great the earnings were from Google and from Amazon. This market's going to go off. It's going to run, run, run. And it very well could run. And I know that those good earnings are coming. Again, my point is it's not representative of the S&P 500, and I think that air is going to get let out of the balloon. And after this surge higher, I think we're going to start to see some pretty heavy resistance on the backside because we still don't know how we recover from this. We don't know how other countries are going to recover from this. We don't know if consumers are going to be right back at it, resuming their old purchase behavior. I doubt that they are. I think that that weakness starts to show its head late May, early June in particular, when we're really struggling to try and reopen and get things going again. So I need to see technical confirmation to tell me that it's time to get short, but I'm very, very cautious on the long side in here. I think you should be as well. That's it for today. I hope you like the content. Please give it a thumbs up if you do. Make sure to Subscribe to this YouTube channel and turn on your notifications so that you never miss one of these videos, because you never know when I'm going to have a trade idea and when I'm going to post these videos, which, by the way, I had a trade idea Sunday night when I was sitting down doing some research, and I posted a video last night. It was on Abbott. So I should go in and take a look at Abbott today. I've had some people tell me that they were getting filled on the spread. I don't think the price was quite there yet. So you saw this gap higher with Abbott, and then it pulled back, and we were trying to sell the May 1st $90 put on Abbott and buy the $89 put. We're trying to do that for a 20-cent credit. I said I might go down to 15 or 16 cents. Maybe that was there. But I feel that this trade has probably passed because we were really wanting to get it off this morning. I also thought that we might have market weakness. That's how the S&P futures were indicated last night when I did the video. If we would have had that market weakness and a little weakness in the stock, perhaps down to that $93 level, I think we'd have had an easy time getting into the trade. Didn't happen. It's okay. We're going to move on. We're going to wait for the next trade. We're going to try and get into that. Sooner or later, we're going to be adding to trades, but we're going to be doing it on our terms, and we're not going to be forcing it. So again, please subscribe to the YouTube channel and turn on your notifications. Thanks so much. We'll see you tomorrow. Look for that earnings video that shows you how to play earnings before and after earnings using Option Stalker. Thank you.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.